So you want to buy a business. Well, buying a business isn't just as easy as looking at the figures or the information that's provided from a legal point of view. There are 10 critical criteria that you need to look at when you're buying that business that even your lawyer and accountant don't know. They're outside of their area of expertise. So these 10 criteria, well, the first is minimal startup cash required. And we'll talk about this a little bit more in a minute, but it really is important that you have some startup cash when you buy an existing business. Avoiding labor-intensive work. And again, we'll talk about that a little bit further. Assured and fast stock replacement. Stock and stock levels are the number one challenge to any purchaser of a business. High gross margins. You need to know what your gross margin is. You need to understand gross margin if you're in business, but it becomes particularly important if you're buying a business. The frequency with which people buy your product or service. We'd all like to get immediate returns. You get paid right now for what you do, but you need to understand the terms of trade of the business you're buying. Little or no competition. Competition could be a really good thing, but understanding what your competition in this business that you're buying is a really important thing that you understand before you actually put dollars on the table and pay for a business that you're thinking of buying. No liability after a sale. Guarantees, warranties, protection, but what does it really mean? No seasonality, no perishability, no price drops. Another important criteria you need to look at before you purchase that business. And no regulations except in favor of a business. Well, I'd love to say in the business world that would be really great, but there are a lot of things you need to consider before you purchase that business. So, startup cash. You need to look at your personal finances. You need to look at what you're going to need for stock replacement. What are the current stock levels in that business? Often you'll find that in order to get a really good balance sheet, the company you're purchasing has run their stock right down to minimal levels. Equipment replacement. How old is the equipment in the place? The machinery, the computers, the till. Is it actually adequate for running the business in today's world? And something that a lot of people really forget is that there is a consequence of changing ownership of a business. Think about a business you've seen in your community that said under new management and you've gone, okay, well, we'll go give it a chance, but because you really like the old owner. And there are some serious consequences, both positive and negative, that can happen from purchasing a business and changing it over. Labor-intensive work. Now, one thing you need to understand is any new manager, any new owner coming into a business is going to want to change things. And that's going to have an effect on workflow, on the processes within the business. It'll have an effect on you. It definitely has an effect on any staff that are there. It has an effect on the suppliers. They may not like you as well. They don't know you. So they're going to want new terms of trade, new conditions. They're really going to be very, very careful. And how about the clients? How about those buyers? How are they going to feel? And what are they going to expect out of you compared to what they expected out of the previous owner? Fast insured stock replacement. Now, stock management is a huge area for a lot of businesses. And before you turn around and say, well, the business I'm buying doesn't have any stock, take a look. What about paper? What about pencils? What about stationery? What happens with time? What happens in terms of changing suppliers? You got to run a whole bunch of what-if scenarios here, and you need to look at any production timelines. And remember, while sales goes out and gets the business, production is what earns the money that sales found. And you need to do some administration too. Gross margin. You need to understand that gross margin is from a formula called selling price minus cost price divided by selling price, multiplied by 100 to give you a percentage. It is impossible to ever get more than 100% gross margin. So even if your selling price is zero, or your cost price is zero, your selling price minus your cost price divided by your cost price at most would be 100%. And there's always some cost. People buy often. Now, if you want to grow a business, you need to get more people to buy more, get more people to buy more often, or ideally get more people to buy more often, and then you can grow your business. But you need to know how often people buy. So look at what you're producing or what the company that you're buying and what the frequency is of those purchases. Immediate returns. Hey, cash is king. No question about it. But if you take credit cards, if you have invoicing, that's a delayed time frame. You need to understand the returns on this business because you may have actually had to borrow money in order to purchase the business. You need to figure out how you're going to pay back that money. Little or no competition. It would really be great if every product was unique. But what you need to recognize is that there's things like differentiation, substitutions, there's awareness of different things. You may have the best solution in the world, but if nobody quite knows that you're there, it's going to be very difficult to give you what you want. And competition attracts sales. No liability after a sale. You need to understand what guarantees and warranties you're going to have to give. What the odds are on that warranty having to be delivered upon. So most people count on the fact that they'll give a guarantee or a warranty and the chances of anybody ever claiming it is practically nil. What happens in the business you're buying? You need to understand that because it's an important part of what will affect your cash flow. No seasonality, no perishables, and no price drops. You're going to, in some businesses, find that you're dealing with products that they only have a limited shelf life. Some products, great in summer, no sales in winter. What happens in this business that you're buying? What happens to the price of a product when it goes out of season? You need to understand that before you put your dollars down and buy that business. No regulations except in favor of the business. Now this includes simple things like your licensing, like your tax numbers, like the type of business you do. I don't know of too many areas in the world where there are not some kind of requirements about your signage, how to perform, how to do anything. Even on the web, there are some conditions that you need to understand. So you need to look at the regulations around this business you're buying and how they will affect you and what they're going to cost you every year, because it could be the difference between good profit and not so good profit. So you want to buy a business? Hey, don't you owe it to yourself to take and look at this little ebook? Now there's two options to buy it. You can pay $29.95. You can work through the book. You can follow the steps. You can do your own assessment. But if you want some additional help, you can buy another option whereby for $99.95, once you've looked at the business, you've done the evaluation, you can send in your evaluation and we'll give you some comments in exactly the same way as your lawyer or your accountant will give you some comments. But it's done now based on these criteria and what you need to be aware of. Doesn't mean it's a bad purchase. It just may say, take a look at this and adjust your buying price accordingly. Good luck in your business. Buy a successful business. Grow that business. Have fun with that business. Thanks for watching.